Can you see my ladder on the left? And I just wanted to talk to you guys about the execution here. If I put my order display on, how to trade the data here. So obviously that's way better than expected US data. In fact, that consumer confidence increase in September, the second consecutive months, which means that consumer confidence in the US is now at the highest level since the recession. Combined with that data coming out, you can see my entry long here going long 4. Combined with that data coming out, who recognizes that level? 2144. We've been talking about it all of last week and all of this week. Here we are again, just from the belly side, 2144. Just above that, we've got the pivot level. And actually, I'm just going to take one more contract off here if it lets me. I'll just leave one on. I don't want to hold on to this too much. Obviously, good US data not always that clear to trade. But hopefully you guys were able to take advantage of that data as well on the S&P. It's always a gift if you get fundamental data coming out at the same time that absolute crucial technical levels are being tested. Because then you have the fundamental trade backed up by technical execution. Right? We all know, we've all been looking at 2144, haven't we? All last week we were talking about 2144. Good US data comes out in the S&P. That was a really clear trade there, I think, in the S&P. Just also then covering other trades that I've done today. I've been trading gold short. So I've been short gold most of the day. And you can see my execution here in gold. Let me just make these arrows slightly larger. So here you can see with gold, really my first short, going all the way back till this morning. So we held at the pivot level. And now you can see me here throughout the afternoon trying to trade that break below S1. It did happen in the end, but only after a long and very patient wait, actually. And then here, these blue arrows, you can see me scaling out. One more attempt at a push lower, not happening. So scaling out. So there's the gold trade. All in all, that was a 3-hour trade in gold. Just there. I've just taken off one more contract on the S&P, just as we've pushed higher. So I'm going to change my contract now to one. Now there's the level of support, the pivot level. But really, as we know, the level of support is 2144.50. So I'm going to place my stop below that level of support just for the final contract that I have left. And I can let this one ride, really. So just 2 products, 2 trades, really, for me today. Short gold for about 4 hours. Does anyone know why, looking at any other asset that you can see, what was perhaps the rationale for going short gold? Who can tell me, looking at other assets, what might have given you an indicator that gold was going to be a good short? I'd say there's 2 of them. Yeah. The USD and oil. Absolutely. Dollar strength all day. And I was, actually, just to talk about the psychology of it, it's funny, I'm linked into Anthony's email here. It's not. Hold on. You can see me getting a bit frustrated. Here, these are my sort of private messages to him, saying, "Come on, Anthony, what's your thoughts on gold now? Look, isn't the US dollar strengthening? Shouldn't gold go? Can you answer?" And then look at the typos here. So you can see, because this was when I was about 6 or 7 contracts in that short gold, and obviously, going through the mill that you guys go through. The dollar continued to strengthen, and then, as you would expect, gold got smashed. So, but it's never easy, is it? There's never a clean line. If it's easy, you probably don't want it. And that goes for relationships as well as trading. Anyway, on that note, without diverging too much, I'll leave you guys to it. Just thought I'd share my trades. Short gold, dollar strength. Long S&P, good US data. What a difference a week makes.
Another point as well is that now that the Fed meeting is far removed, good is good, as in you've had good numbers, instead of good being, oh my god, rate hike, sell stocks, which is
Yeah.
a week and a half.
It's good. Anthony's making a good point in that obviously the Fed meeting's done and dusted, that's over with. So when you used to, leading up to a Fed meeting, you used to have a sort of theory that, look, good data could be bad for equities because it means Fed hike. But now that meeting's out the way and we've got 3 months till the next one, you know, what the S&P could be telling us here is that certainly for now, good US data can reflect in moves higher in US equities because the whole discussion about interest rates for now isn't as prominent in people's psyche. So S&P just coming back to test the pivot. I just thought I'd share those trades with you. All right, guys, thanks a lot. See you in the room.